Welcome students to the first lesson in structure mastery, where we're going to be talking about wave theory and multi-timeframe structural analysis. Arguably the most important first lesson that you must begin to master prior to talking about any of our other concepts before getting an intraday mastery, algo mastery, as you must know the structure of trends, how to read the markets fractally before even tying in everything else. Because if you're on the wrong side of the trend, if you don't know how price is making these internal waves that you're coming to learn, and you don't know where price is going or how it's going to get there, everything else that follows is bound to fail. So let's get right into it. All right, so in today's lesson, you guys are going to be learning the vital importance of wave theory and market fractality, understanding how the markets are fractal by nature, what that actually means, what wave theory is, and how we apply it to build the highest probability trades. Everything in the market is fractal, and when you understand that every trade that we take is of the highest and most probable degree because we're building this narrative, that's what you're going to be learning in this lesson. You need to be able to learn how to conceptualize the lower time frame, as it is going to be solely responsible for building the higher time frame narrative. Everyone always says trade the trend is your friend until it ends. But what's actually building the trend? And it's going to be the lower time frame. Furthermore, is you're going to be receiving the essential foundation to master structure from a lower time frame to a higher time frame basis. This section, this lesson, and the next multi-timeframe analysis lesson, which is complex multi-timeframe analysis, are the most important lessons that you need to master prior and before moving on to any of the other concepts. Even if you think you might already know this, I urge you that you will learn something new today, or at least have a new perspective. And it's always about seeing things from a different perspective. And mastering structure and market fractality is the largest stepping stone when you're going to understand how to apply market fractality for all concepts. So we need to become phenomenal story writers before becoming the best traders. You can't just hope that you're going to go on the charts, learn everything and in a day, and you're going to be phenomenal from the get-go. You have to become a detective. You have to reason why price is doing what it is doing with a very high degree of interpretation, logic, and accuracy. To get professional results, we need to think like a professional. But before becoming that professional, we have to build the roadmap to get there. And understanding this whole narrative by being story writers, we're going to be making a continuous story for what price is doing, why it's doing it, the most important factor, and how it is going to get to where it needs to go. So without further ado, let's get right into it. All right, so our first section is going to be the conceptual understanding. What is wave theory? Now, some of you guys may have heard of Elliott waves or, fractal wave theory, but this is our edge on it to make it in the most simplified manner for you. The markets are fractal by nature. Now, what does a fractal mean? Or what does fractal mean? A fractal is essentially the same image or the same pattern that is continuously being looped in on itself. So if you've ever seen a tunnel where you're looking at a tunnel, it's just going in and in and in, and it's never ending, that is a fractal. Likewise, a very good example of a fractal in a real life scenario would be Russian dolls. Russian dolls are the same doll that just is inside of the previous one, then further one is inside of the previous one, and so on and so forth. So all these dolls are fitting inside of one another, and they're the same image, so they're continuously getting smaller. And this is what fractality is. The same thing being applied in a very fractal manner. Now, fractals can be applied in endless ways, but specifically when it applies to market analysis, we are referring to waves within waves. In the markets, you have structure, and this structure is what we need to be understanding as individual waves trying to build a bigger picture. So if this is the bigger picture that price is trying to build, in order to build this bigger picture, there are going to be several smaller waves that are going to be making one big wave. So if we look over here, when you're looking at the markets, you're always going to have some form of main leg. Within your main leg, irrespective to the time frame, that internal or that structural point that you're looking at, that higher low that makes the higher high, or that lower high that makes the lower low, there are going to be many individual waves that make up that main wave. And we call these internal, or these internal waves, obviously now internal. These waves are internal to the main structure that price is developing on the higher time frame. So if this is a higher time frame leg, we know that on a smaller time frame or internal lower time frame, there's going to be internal structure that is going to be made to create this leg. Furthermore, is that when you see a wave that looks like this little leg, this white leg, let's draw your attention here. What do you think price is going to look like on an even lower time frame that's going to build this leg? We're going to have internal structure. So a basic application this could be, maybe you've identified a 15-minute structural leg. Within your 15-minute leg, you're always going to have internal structure of your main trend, your main leg. This could be the 5-minute structure that builds your 15-minute main leg. Within your 5-minute structure that's building your 15-minute main leg, you're going to have most likely all this 1-minute individual structure, main wave or internal waves, that are going to be developing the internal waves of the main trend, the main leg, right? So this is what market fractality is. Notice it's always about waves within waves within waves. So again, to reiterate, when you're looking at this, think about it as in the smaller time frames are building the higher time frames. So because we started from left to right, let's start to practice the application of it going from right to left, as that's how the markets are going to be forming. So if these individual orange dots are, let's say, are the 1 minute, we can see that price is building higher highs, higher lows, higher highs, higher lows, higher highs. All these individual 1-minute waves are responsible for building this 5-minute leg, right? Same thing over here. We then have a shift. We then have some form of break of structure on the 1 minute, and then price shifts to then create a retracement on that 5-minute leg, the white structure. And of course, what does price do? It then resumes back to bullish structure on the 1 minute, which tells us price is now aligned to continue that new 5-minute leg to make that bullish structure. Now, within each individual of these white waves, right, what's making them is the 1 minute. So now if we look at these white waves and we move them over to here, we know that within each individual higher low that makes a higher high, and then the retracement or the pullback that makes a higher high, all of that is going to look like this on the 1 minute, because it's building this 5-minute white bullish structure. Same thing over here. What is actually building the 15-minute blue main structure? It's going to be consistent of your 5-minute internal structure, right? Your internal white structure. So it's always viewing the markets fractally, structure point by structure point by structure point. Now, within each trend, very important to note, you only want to identify 2 structural trends, your main trend and your internal trend. So if you have one time frame here, say it's 15-minute again, you only want to identify that 5-minute structure within, because you know, yes, there's going to be other structure, but that other structure that looks like this will be internal of each individual 5-minute wave. Now, at first, this could be a confusing concept, and this is by no means simple. We get right to the point. It's advanced, but we're going to take this to the next level of understanding now, as this is still the first section, first lesson for understanding what multi-time frame analysis and wave theory is. So let's move on to figure out what actually multi-time frame structure analysis is, now that we have a conceptual idea of what fractality is. So multi-time frame structural analysis is the art of applying wave theory to the charts and mapping out how the lower time frame internal structure creates the higher time frame main structure. So wave theory is applied to the charts, and that's what's making structural analysis, understanding how everything is working together as a simultaneous automated functioning gear. And we're always building that bigger picture, right? We're always going to be building some bigger picture, and what you consider the higher time frame is all relative to what you're currently looking at. You know, the 5-minute time frame could be the main structure, and your internal structure could be your 1 minute. So in that case, your 5-minute would be your higher time frame. Just like if you have a weekly and a 4-hour, your weekly time frame would be the higher time frame structure, the pro trend, that would be formed by that 4-hour internal lower time frame structure. All those individual 4-hour waves building that one leg on the weekly time frame. Right? So then ask yourself, is the lower time frame counter trend or aligned with the main trend? Right? Always asking yourself these two questions are always very important. What's the bigger picture that's being built? And is the lower time frame counter trend or aligned with the higher time frame? So because we just talked about, we have our main trend and our internal trends, what we need to know specifically is that there's something called a complex pullback, and this is consistent of internal and main waves. The higher time frame pullback is created by an internal lower time frame structure waves after a BOS. So if you've ever wondered, why is a pullback happening? If you have if you have your 4-hour main sell right here, you have a lower high, lower low, lower high, lower low, and you know that you're bearish, do you know why these pullbacks actually occur? These pullbacks occur because it all starts on the lower time frame. Price isn't just going to make a random 4-hour leg here. What is going to be making that 4-hour pullback is how price is shifting and delivering on those lower time frames. Case in point, if you are pro trend, and let's say we're looking to sell, we know that a counter trend BOS on a lower time frame means that if you have your main pro trend structure, your lower highs and your lower lows, your internal structure to your main trend is going to be that first individual lower high, lower low on that next lowest time frame, right? So it's going to be on your next lowest time frame. So what actually makes these legs? Well, we can see that this leg is made by internal lower highs, lower lows on a lower time frame. But what actually makes this retracement leg? Well, if you see, price actually shifts structure on the lower time frame to build that higher time frame pullback. So a key point to note is that a counter BOS is an internal BOS that is not aligned with your higher time frame. So if we're bearish and we see price break structure on our internal time frame, that means that we have a pullback, a presumable pullback on the higher time frame structure. So this point right here is what we're going to be classifying as A. When you have that pullback and you see the lower time frames are now counter trend to your higher time frame, that tells us we're having a pullback. So the pullback is going to continue to happen on the lower time frame. And as soon as your last higher low internally that makes your higher high is broken, this is what we call a internal pro trend BOS. After this internal BOS happens within our higher time frame leg, that tells us that the higher time frame now is ready to resume the bearish overall trend. So the first counter BOS is a pullback. The next BOS is going to be the resume of that higher time frame structure, right? So the same thing applies for your buy over here. What is the pro trend? The pro trend scenario in this case is we're looking to buy, right? We are going to be looking to simply take a buy position because we're in an uptrend. So now that we know what our pro trend is we're looking for buy, What would be the internal counter BOS? Well, within this leg, we see that price is making, right, internal higher lows, higher highs, higher lows, and that is responsible for building this individual leg right here. As soon as that last higher low internally that makes that higher high is broken, this tells us now, because the internal trend is no longer aligned for that bullish structure, we're now going to be having a pullback on the higher time frame. So now you see what happens. We're bullish, and then price starts to have a retracement because of the lower time frames. Now we have a lower low, lower high, lower low, lower high, so on and so forth on the internal. That's the pullback. But when is the pullback over? The pullback is over when price breaks structure again internally, but in this time to align with the pro trend. So as soon as our internal structure breaks and we see, all right, that lower high that made the lower low for the higher time frame pullback has now been broken, that tells us, hey, we're now ready to align back with the higher time frame. So we're looking to resume and make new higher time frame higher highs. So for that, you guys can clearly see the first BOS is a counter BOS, an internal break of structure that's selling in a higher time frame bullish trend, and that second BOS internally is the responsible wave structure that is broken that causes now the higher time frames to be back in alignment. So it always starts with the lower time frame. You have to understand what your higher time frame structure is, and you always mark out your internal structure of your higher time frame. Always, 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 right? Now, what has precedence structurally is always going to be your higher time frame structure. So specifically, if we want to apply an example, we can do this as a reference point. This is not to say that this is how everything works, but it's a really good guide for you to start understanding how everything works together. In this instance, let's say that maybe your lower low, your lower high, your main structure is, let's say it's the 4 hour. If this is your 4 hour structure, you're white. Your internal structure, right, if this is your 4 hour range, would be your 1 hour potentially, right? So we know that all these individual lower lows, lower highs on a 1 hour are going to be building our 4 hour leg. Once you have a BOS on a 1 hour, that potentially indicates that price can have a pullback now, because we are now counter trend to the pro trend, and this is why price will start to develop a counter trend position, delivering just to create a pullback. So this pullback that happens again on that 1 hour does not mean that price is now reversing all the way for buys. So be mindful of that. Always keep in mind that main trend. As soon as the 1 hour breaks again, guess what? That tells us, all right, 1 hour is now aligned with the 4 hour. That's a double time frame confluence, right? That when two time frames line up with one another, you can pretty much say, all right, we have two time frames lining up. We're now bearish, resuming the bearish. We're going to now be targeting that higher time frame, lower low, right? So now that we've already went over both of these two, I would practice this, write this down in your notes, understand how the main and internal structure works. And just like I went through the previous example with the 4 hour and the 1 hour for the sells, you can go through with the buys. So now that we understand a little bit about wave theory and multi-time frame structural analysis, how do we actually apply it? At a basic level, we need to identify the correct structure points to properly build this narrative that I'm speaking about. If you do not mark the right structural points for both the main and internal trend, you are going to be bound to lose from the start. And if you don't lose, it's a very big gamble. You always need to mark out both. Understand from whatever wave you're in on the main trend, you want to always go down to lower time frames and figure out what the internal trend is. And why are you doing that? Because you want to know what areas need to be broken or what structure needs to be broken. That's going to tell you if price is going to have that retracement for the higher time frame, or if it's now going to be aligned with the higher time frame to resume that structure. That is very, very crucial, and many people do not do that. If you don't do that, you're going to be exponentially more prone to being trapped on the wrong side of the market. I don't know what it's doing. This is structure, BOS. You're going to see BOS everywhere. But always keep in mind the higher time frame has precedence, right? In specific scenarios, of course, and as you'll learn, as you learn, there are reasons and places why that happens. But needless to say, identify where in the price cycle prices currently is and where it's going. Going back to the previous example from the previous slide, you need to know where in the price cycle are you. Let's say, for instance, that you are right here. Let's say that you see this and you see a BOS and you are looking for, say you're looking for sells. Great, you can be looking for sells, but now let's say you're looking for let's say you're looking for maybe an order block, maybe some reason to sell over here. If you see a BOS and you don't understand that now we're ready to align with higher time frame, you're going to be on the wrong side of the market entirely. So exactly as you see these diagrams, make sure that you identify and mark your charts always this way. I've done this for the past several years, and this is what always leads to the highest quality trades. And if you fail to do this, you will be on the wrong side of the market a lot. So again, very crucial for everyone to understand. So you've been able to refer to the previous slide. How do we actually apply wave theory multi-time frame structure analysis? What's the process? What is the goal of it? Now, at a basic level, the sole focus of this video is for us to understand how the internal time frame always is going to be building that main structure. Now, you're only going to be looking at two ranges with wave theory and multi-time frame structural analysis 101. You're looking at the main trend and what the internal of that main trend is. And what you choose as the main trend is generally going to be your higher time frame, your 4 hour, daily, weekly, so on and so forth. And your internal trend will be typically a couple time frames, that proportionally lower. So if you're looking at the 4 hours, your main trend, your 1 hour will most likely be your internal trend. And the reason that we're trying to understand, how to apply it is because we need to identify where in the wave cycle price currently is and where it's going. Meaning, if the internal structure is aligned with your main structure, we know that it is going to be making a higher high or higher low. If your internal structure is counter trend to your main structure, that tells us that we have a pullback forming on the higher time frame. So that's going to allow us to catch some pretty solid intraday or minor swing moves in the counter direction, but you always need to be mindful of that pro trend scenario, the higher time frame direction. And you always need to make sure, always, very important point, always mark the main and the internal structure for every trend. Any chart you look at, you need to identify both, so you know exactly where in the wave cycle price is on the higher time frame, because you know how price is creating the higher time frame based on the lower time frame movement. So now we're going to go right to TradingView and apply what we just learned. All right, so in this example, we are going to be looking at USD CAD. Now, throughout these examples, throughout the mastermind course, we are going to be using a plethora of pairs. Some pairs y'all may have never even traded before. And the goal of this is to ensure that you know that's not a one size fits all. It's not like you're looking at one concept, one specific way, one specific pair. It works on everything. Crypto, futures, XYZ, right? So USD CAD, we're going to start on the 8 hour time frame in this example. And what we always do first is we need to identify the higher time frame trend. What is the main trend? Meaning the 4 hour, 8 hour, daily, weekly, monthly. Where is price generally going? And if you don't understand how to properly navigate and identify structure, everything else bound to fail is bound to fail. You have to get good at structure, because as you go on, you're going to learn a lot more about structure and how we utilize it, but you need to understand how to properly apply it first. So when you're first going on the charts, what you need to do is identify your higher time frame or your main trend. At a very easy approach, there's two things you need to do in this instance. First of which is identify generally where price is trending. And what better way to identify the trend of a market by then drawing a trend line. So we see here, just by drawing some form of directional trend line, that can help you start to understand the trend. Now, in this instance, we can tell that we are bullish on the 8-hour. So now our goal is going to be to make the charts fit our narrative, fit our bias. So if we're looking for buys, we only want to identify higher highs and higher lows on the 8-hour. You don't want to identify all the internal moves because that's not going to be telling you anything. You just want to identify what the main trend is. All right. So looking at the 8-hour, we need to focus our eyes and even squint your eyes. Where do you see the major expansions that make the higher highs and the pullbacks? The major expansions and the pullbacks. All right. So on here, we can see based off of the 8-hour that this is the trend that we identify. We see that we have some form of higher low that makes a higher high. We have a higher low, a pullback that makes an expansive higher high. Now, again, I'm not going to say, oh, higher low, this is a higher high, higher low. No, because that is not the obvious or the main trend on the 8-hour. I know that'll be some form of internal trend, right? So we're identifying, first of all, where is the higher time frame trend? And we see clearly in this case that the higher time frame is bullish respective to this last higher low that made this current higher high. That price is at currently. Now, after we've identified what the main trend is, because we want to practice and really start to understand how the wave cycle works, we need to identify the internal trend. And you can refer to the third or fourth slide on the presentation exactly how the main and internal trend works. And we do this again to identify the internal trend to understand what phase the higher time frame is in. Is the higher time frame in a pullback phase right here, or is it an expansion phase over here? And all of that is depicted by the internal waves, right? So if you are not on the right side of the mark and you're only identifying the internal, you're going to be making some grave mistakes that are going to have some consequential lessons. All right, so if the 8-hour is that higher time frame that we're looking at, specifically what we're going to be focusing on is why this pullback occurred and then why this expansion occurred. And you want to start practicing this for every range, whether you want to understand why this pullback happened and why this higher low created the new expansion. It all starts on the lower internal time frames. So like we said, we're going to identify over here, why did this pullback occur? It was responsible of the 4-hour internal structure, right? So if we open up our object tree, let's see, pause the screen now, see if you can practice where the internal trend is. All right, so now the internal trend is going to be on our 4-hour time frame. So let's go down to the 4-hour. So let's see how within here we can identify the internal trend that makes that higher time frame narrative. All right. So studying this, we can see we want to always start from the left to go to the right. You can't just start randomly. You always got to make sure you identify the correct internal points. So the 4-hour in this instance is the main trend is the internal trend of the main trend on the 8-hour. So we see starting from the left to the right, we see that we have a higher low, higher high, higher low, higher high. As soon as this higher low on the 4-hour that made the higher high is broken, that is the first instance that we know we're in the pullback phase on the 8-hour time frame. So again, I'm not going to be identifying all of these individual higher lows, lower highs, lower lows. I want to focus on where's the main move. Squint your eyes. In this instance, I see that the main high created this main low over here. Great. So now we have a new lower low. Now we're in the pullback phase successfully on that higher time frame. Now we see that we have a lower high, right? That then makes a lower low. So we're still bearish at this moment. But as soon as price breaks internal structure, this is where price resumes the higher time frame structure. So naturally what we're going to do is as soon as this higher low breaks the internal lower high and makes a new higher high, we then are just simply going to be looking for continuations. We're just going to be focusing on the internal trend for it to make new higher highs on the daily. So we then have a new higher low, new higher high, new higher low, and then so on and so forth, and price keeps going higher. So we need to study all the internal moves to understand on an internal time frame how the wave cycle is developing, so we know what phase we're in on the daily. And this takes a lot of practice. You know, over time it'll come to you naturally where you will be able to identify the right structural points flawlessly or pretty damn close. But in order to do that, you have to have the experience doing it. So start going on the charts, practice higher time frame buy scenarios, sell scenarios, as we're going to be going through in just a moment, and study how the internal time frame is delivering to understand how it's building the higher time frame narrative, right? So now let's look at our other example where the higher time frame is going to be bearish. All right, so just like we did in the last scenario, we're going to identify the 8-hour as our higher time frame. It just so happens that the 8 hours is the higher time frame in both of these. So let's start to understand why all of this occurred, and specifically we want to figure out why did price create this whole sell all the way down. All right, so looking at this, we can clearly see the first thing. What is the higher time frame trend? Draw your trend line from left to right. We can see in this instance that we are in a bearish market. We are going to be looking for sells. So if we're looking for sells on the higher time frame, what do we need to do? We need to identify the lower low, lower high structure that's going to fit our trend line, our bearish structure. So what do? Again, start identifying from the left to the right on your 8-hour what the higher time frame looks like. Now, because we already have this pre-drawn out, give you guys a second to go ahead and pause the screen, identify what that structural shift looks like, take some practice, and see if you can properly apply it. All right. So now we're going to go to our 8-hour time frame. How is price delivering? Well, starting from the left to the right, we see that we have some form of low that creates this huge push up to make, right, a high. We then have a higher low right here that makes a higher high over here. So at this moment in time on the 8-hour, we were bullish. But what do we see? We see that the 8-hour, that higher low that made the higher high structure was broken. So that indicates that we are now in a bearish market. So after the low was, a new low was made, that main BOS, we then had a pullback, right? A pullback on our higher time frame, which tells us there's going to be some form of structure, internal structural shifts following wave cycle. That's going to indicate a counter trend pullback, and then it's going to resume the higher time frame. So then, of course, in the higher time frame, we have a new lower high and a new lower low. A new lower high that makes a obviously new lower low. But we specifically want to focus why this pullback occurred on the internal time frames to understand again the waves of the fractal wave cycle. So let's practice starting from left to right, identifying two things. Why did this pullback happen on the higher time frame? And then why did it resume the higher time frame structure? How is it delivering on an internal time frame that could have given us further insight that we could have been on the right side of the market? So let's go down to the 2-hour. In this case, the 2-hour is the internal trend of our main structure, right? So again, I'm going to give you guys a minute to pause this and see if you can identify what the correct internal structure is. And remember, always start from the left to the right, and we want to figure out why this pullback happened. And you always need to start from the previous lower high to make sure that you identify the correct internal BOS and the right structure points. Because if you just start randomly over here, you will constantly be on the wrong side of the market. So don't take it the easy way out. Let's identify it properly. So go ahead and pause the screen now and see what you can do. All right. Hopefully you've had a minute to pause the screen, put your skills to the test, and let's see how we can properly apply this now. All right. So on the 2 hour, hopefully you identified the internal structure like so. Starting from the left to the right, we can clearly see that we have some form of internal higher low, internal higher high, it is broken. That is also when our higher time frame 8 hour structure was broken. So now we are going to be looking for the market to shift, right? So now we see we have a new lower high internally that makes a new, not here, but makes a new lower low all the way down here. Make it fit the narrative. We then have a pullback for a lower high, and then that makes a new internal lower low. And we're still aligned with our higher time frame, mind you. Right? So after this new lower low is made on the 2 hour, what's going to successfully tell us that we are in a pullback phase is once that last internal lower high that makes that internal lower low is broken. So again, at an initial glance, some of you guys might have selected this high as the BOS point. In this matter, that is not the correct structural point. This is because this is the lower high that was responsible for breaking, right, this internal lower low. So after we see that that internal lower high was broken, that was the first indication that we had an internal structural shift transpiring. After that internal BOS happens, this indicates the pullback phase of our blue 8 hour main trend. So the internal structure has broken, which tells us we are now in a pullback on the higher time frame. We then have a high, a new higher low, a new higher high, and this is again, we are bullish in this moment. But you always need to remember we are in the pullback phase. The higher time frame has the precedence. That's what we're trying to build. So while we're in a pullback, the main move is still sells. So of course, after we have this internal structure, we have our higher low, we have our higher high. Where does the BOS happen successfully? We see that right here. This is that last higher low that made the higher high. It is now broken. This tells us internally that we are now back aligned with our blue higher time frame main structure. Tells us that we're ready to resume and make new lower lows. So after this point is broken, all we simply do is follow the internal structure, the yellow structure, to identify now how we're going to be targeting our new lower lows, right? And then you'll notice new lower low, lower high, new lower low. And what does price do? In this instance, your new higher time frame structure is broken. You then have your new blue pullback wave. And after we have the pullback happen, notice that price actually just comes to fulfill and satisfy that lower time frame internal trend. It doesn't break it, so it's still being maintained. And that's when we had this massive sell-off occur, right? So now we're going to hop back to the presentation and we're going to review the main key takeaways about multi-time frame and structure and wave theory. All right, so these are your major takeaways about this lesson. The first thing is always build a narrative for price from the higher time frame to the lower time frame. We are storytellers before traders. If you do not build a story of logic, purpose, intention, and try and understand what price is doing, what the bigger picture is, you're just going to be gambling at the end of the day. You have to have an edge, and this is what's going to be the first foundational step that's going to allow you to think from the perspective of institutions when we cross that bridge. Second thing, a counter BOS on a lower time frame equals a pullback on a higher time frame. So if you are bearish on the higher time frame and you have an internal BOS that is now not aligned with sells, that tells you you're going to have a pullback on your higher time frame. Likewise, a pro trend BOS on a lower time frame, once you're finishing that pullback, that's going to be making those new lower lows, and it aligns with your higher time frame, that tells it's going to be resuming the higher time frame structure. Your pro trend is the highest probability to trade in. And if I had to urge anyone to just follow, the best trading style, the best trading plan, just follow the higher time frame. While you can take really good counter trend trade opportunities, the time frame, the higher time frame is always going to be your friend. Now, of course, when we get to the more advanced sections and lessons, you're going to understand how to do the both of them flawlessly. But for the time being, just practice on catching those the higher time frame trends where you have the internal structure that is resuming the higher time frame, and that's really all you want to focus on. After that pullback happens, focus where price on the internal time frame is going to cause price to align back on the higher. Just trade in that direction. Do not get stuck on the lower time frames. This is something that many novice traders and beginners oftentimes do. There is no correct time frame. Every time frame is trying to build a bigger picture. So by identifying your pro trend, your internal time frames, it's going to tell you how the lower time frames are building the higher ones. So very important that you need to constantly be agile and shift between internal to main time frame. What is the picture? That's just a skill set you're going to have to adapt to if you're brand new to it. It's going to take practice, but the more you practice, the better off you're going to be. So that's going to avoid you being on the wrong side of the market, because if you're on the wrong side of a trend, and any concepts that come in the future, if you try to apply and you're on the wrong side of the market, they either won't work or they'll work very, very short term, but then you could end up losing. So the understanding structure is the foundation of all things to come. Mastering fractal wave theory will be the first major game-changing milestone for your success. Now, whether you're already a highly experienced student or if you're brand new from, a boot camp or you're just joining the mastermind course, study this, practice this. The more that you learn and you don't apply and you practice it, doesn't mean that you're going to be making more money. Keep it simple, stupid. Practice this until you feel very confident, and then move on to the next sections. Oftentimes people forget the core and the foundation, thinking I already know that. But if you go back to the drawing board and you can be objective as a whole, oftentimes people are really forgetting the multi-timeframe analysis. So this is going to be your first major milestone in understanding fractality, understanding, logic, what building a narrative actually means. If you've had a question about that, what does building a narrative mean? Build a story for what price is doing. And if you have logic, then you have purpose to be taking trades. But you have to have high logic to have stellar winning trades, right? We're not just here to gamble. We're here to make our money exactly as professionals do, to get the professional results that you guys desire. So that is it for this lesson's videos about wave theory and mastering multi-timeframe structural analysis 101. Join us for the next video. Let us know what your key takeaways were from this video, what new insights, comments, questions. DM us, hit me up, let's talk about it. Looking forward to your guys' journey, and talk to you guys in the next video.